Hello, good morning. Welcome to another ES Futures Trading stream. Today is Tuesday, it is June 4th. It's 9:28 Eastern Time in the US. The market is just seconds, less than 2 minutes from the opening. Bell. Look at where the Dow was bought, you know, on this area multiple times. Tried to re-enter this range, was rejected. Now it's being rejected again. Look at it's just to the tickets, kind of like it has good odds no upside here, or maybe just to clear this selling that's coming here from this level. This is what the friend used to call, you know, the middle finger pattern here. Right? Nasdaq. Four-month range, trending lower in the weekly time frame. The downside trend has ended in the daily, but this is very questionable here. This is the second time it's being bought from this area here. Just be careful. Okay, and my market is doing the same thing. You know? Buying from the 50s, a lot of buying came from this 100 and from the 50s again. It's re-entering this range here. One time frame lower, alright? It's trending higher now. Market is open, and it is weird. I didn't hear the bell. What? I didn't hear the opening bell. Okay. Well, it is I have noticed that maybe I don't know what can happen here. The market is opening at the highs here. This level seems to be critical level here. You know, what we can have here is an upside or a downside here from this level here. This is a go no go level in the monthly. You know, you can see the same thing going in the weekly as well. Now it's selling from this previous all-time high. That level is this one in the daily time frame. Alright? What worries me from this market, I am not paying too much attention to the opening now because we have yesterday range here, which is inside all this range, all the trade is inside the spike, which is showing acceptance of higher prices, right? Value moved lower throughout the day yesterday, but the market wasn't able to hold, you know, to print these distributions here. And all the distribution were closed yesterday, which is also a sign that the selling that is in the market is not that doesn't have conviction on the low side. This level here, this blue line, is the low of the range. The low of this range here. That's what. We were trying to find something yesterday, but the market can't be bought. And at the end, it seemed to be. It played a really. It played. It was relevant yesterday. Now, the overnight trade, you should be doing this, you know, like at the center, right? At the center appears the range, and today, opening at the center appears the range is an advertisement for chop, you know, and ultimately our rotation are also high when we have these kind of openings. Now, coming back to this is the ES, right? Oh, I was going to show you something else. I got this, right? We have a nice rally, really nice rally, spectacular rally in the bond market. Rallies on markets when this is going higher is because yields are going lower. But notice something here. When we check this, when we check the intraday, you know, just take a look at this. Hold on. You see something really good here, you know. This is quite dangerous here. The market's paying attention, a lot of attention to the bond market, but this is back to back to back short covering days. You know, these bond markets are in short covering mode. Just be careful, pay a lot of attention to that, because if this is just short covering here, and short covering weakens the market in the short term. Gold looks like long liquidation. This is quite the opposite, right? This strengthens the market. Something that is really nice here. You can see even the OPEC has announced rate cuts in productions, or extending the cuts. Crude is falling. You have this high here, price of a high here, but crude is falling. Crude is falling. Right? It's trending higher. It was going higher. You know, for oil, this is not good, right? For oil to fall on cuts, it means that there is no demand here, and that's not good for the economy. Yeah. The other hand is with these prices going lower, the economy is in a really good situation, to improve. Right? Everything is being given there for the economy to get better. Right? They just need to use everything is nice. What happens if the economy doesn't get better is the question. Right? I'm not an economist, so take whatever I say with a grain of salt. We have noticed as well. Where it is? Where it is? Where it is? Okay, these are the markets. The ES being bought for the 50. Nasdaq. This is super weird here. It's a risk. Nasdaq. The Russell seems like this is the weakest one. This has shake off. This has shake all the weak longs. I mean the weak shorts from this market. And every market is doing different things here. This has potential to the upside, or at least to correct this thing. It doesn't mean it's not going to, because the same thing happened here. Two at the highs, it may happen here as well. I don't know. After this, if I check my dailies, market profile, right? This day is unbelievable, right? This is on the end of the month. This is end of the month, and this is short cover rally. Was unbelievable here, and maybe some continuation. I don't know if I should call continuation here, but from yesterday, this area here has really good volume. Something I haven't seen in a while. Notice, for example, how much volume do we have here? Here, 30,000. That is short covering, right? 25,000. That's 8 periods wide. 20. The highest is 35,000, and we have almost 20 here, right? On in one period. B here has added maybe 100, 200 to this number. So all this is in just one period here. All right. That's what's impressive from. That's why I decided to carry this line here. Now from the intraday, the market right now has this weak selling here coming from the 77, very mechanical buy, and also mechanical selling here from not here, my bad. I wanna take that back. This one here. I don't know why I have this mark here. Oh, okay. Okay. There was some good volume here in this too. That's why I have two marks here. But it all started here. It all started from daily halvback. And you can see, right, when that happened, most of that, who is propelling this movement, who is behind this movement? Short-term traders, very short-term traders, very short time frame traders, and most of them have been removed now from this market. And now, opening at the center, it's advertising for Chop, and Chop is being delivered here. I don't have too much interest in doing anything. Just observing what happened here because we never know what's going to happen. There is some news coming also that there is tremendous amount of pressures in banks. They are under serious pressure. More than 60 banks, regional banks are at risk now, and that if something happens, that can trigger something really bad as well. But I'm not going to trade. I'm not going to bet on anything here. Just wait to see what happens. Right? Never underestimate the Fed as well, what they can do. Give me a second. I need to do something. All right. days like this, days like today, you know, I was expecting something like today, something about what I'm seeing right now, yesterday. And and once you expect something, you know, you should be very, very careful with what you do, okay? Because you have a bias. Now, when you expect, as soon as you expect something, you know that the bias has fallen there. You got to be very careful with what you do. Notice the volume here. You know, the volume has come back to normals here. Yesterday we have a really good volume, opening volume. A lot of things were made yesterday. Maybe some rebalancing. Now we are having volume as well. Oh, the nuance here. Now there's something we were talking about these profiles, right? Most of this trade has been conducted inside the spike, inside Friday's spike, with value overlapping higher. The 50 is down here now. Now, the upper side, you know, if you check, let's use our imagination here, just a little bit. We have this all-time high here. That's a nuance here. You know, we have this 10-day range here. Just check this one, right? 10 days here. Another 2-day range, which low, or maybe even 3, which low has been reached and even it over reached, right? And it's coming back, right? When the market re-enters a previous day range, no, not a previous day, previous range, in this case, on Friday it came back in here and has some penetration. We took this range out, this really weak lower day out. The potential destination of this trade is this upside. I'm not saying it's going to go there, right? But there is potential. Okay, when the market re-enters, the market potential to come all the way up to here. And what do we have at the highs? We have a high that was made in the overnight. Now, this level, and that's why I call this level here, right? This blue line here, key, right? Because if there's acceptance, the market may keep going higher. But if it's rejected, right? Because right now it's testing this level here. Now this is what traders call test, right? Let's retest or whatever thing is called, right? But what we do here is we use balance guidelines here, because this can be an area, you know, where this penetration is rejected, and then it keeps going lower here, right? That's one scenario. Now, let's have a bigger picture here. Let's have a broader picture here. I'm going to add a couple days here on the lower side. Because this is when it becomes interesting too. We have a gap. We have two gaps here. There's one gap here, another bigger one here. We have a range we were talking about, the 10-day range up here. I'm using these two-day range to monitor for continuation because the market has re-entered this bigger range, this 10-day range here. And now to monitor for continuation, if the market is aiming to this high to make a new highs here, the next thing the market has is this 2-day range here, right? Has re-entered this range. Okay. Here it targets the upside, right? So this level, my bad, this level here. But once it re-enters this to monitor for continuation, the potential destination of this one is this. What is happening now? The market has re-entered and has been rejected, right? So that's just a monitor for continuation. But this, we never know what's going to happen. Never know what's going to happen. Now, most of these longs here, can you see this area here? Not out. All this inventory here has been shaking out. If somebody is coming here, somebody new, probably is stronger hands here. But having the 50 right here, right here, all this, what kind of traders, what kind of participants are behind the movement? Right? There's significant amount of volume here, really nice high volume here. And this dynamics that I'm watching now, really brings me back to memory of these days of what we had here. Here, and here. It's just up. It's happening here again. And now I wonder, it is one thing, the 200, it is another thing, the 100, and there's another thing, the 50. The higher we go here, the weaker it is. 50, the lower, the weaker the participants. I don't have 20s and not 10 moving averages here. I had something else. Oh, it just went out. Okay, I guess I was talking about this. The volume here. Also, there's some buying that comes here in this area, so you can see it's coming, right? But this contract, this market is also the current contract doesn't have too much time left as well. Why I got all this? Right? I'm going to remove all these things. And you see something else here. On Friday, we have non-farm payrolls. Friday. Non-farm payrolls. It's really, everybody's watching this number here. Thursday, we have the weekly jobs report. 3, 10, 30 notes. ISM, ADP, this can be a prelude of this one. ADP, employment, PMI, ISM, another ISM. Today, in just 8 minutes, we have JOLTS as well. This relates to this and relates to this one. These are all in the same category. We don't have nothing else. I think maybe we'll keep an eye on what happened here as well. This also is something that is to monitor the pressure in the commercial real estate. Okay, so we have Friday, right? We have Friday, and in the middle, that's why I say taking a broader picture here. As we get close to Friday, we may have something. Right now, the market is at the center of this thing, center of this range here. Oh, no, you may even call this level, right, as the base of this range. Something that can happen. We may have some wild swings here, and at the end, just before the number, the market can be down right back where it is right now, or it can be way up here or way down here. Basically, we don't know, right? But pay attention to that, right? How the market setting, in front of the number. What are the conditions of the inventory? And after the release of the number, the past releases, I have the suspicion that there was, at least two of them. But like it's not hard to do your own research if you have the means, right? So you can have the number in advance as well, or something close to that if there is no leaks, right? But it seemed like there was leaks there. Somebody knew what the number was before, and we had, because you have number on Friday, you have Wednesday, Tuesday, and Monday here, right? Usually, I say usually, right? Tuesday is the day previous is a really quiet day. There is a very thin day, very thin market, and nothing goes on during that day. But that wasn't the case, right? That wasn't the case. There was some wild movements the day previous, and inventory was either too short or too long during those. I hope you remember that. And this is trading, right? Trading is remembering those behaviors. What kind of markets we are in right now. Doesn't mean we will have the same market in even tomorrow, because everything changes and we need to change. We need to change with the market. We need to adapt. Okay, we need to adapt. The market is not going to fit to what I am thinking. The market is not going to do what I think it should do. I am the one who has to adapt. If I want to do something, first I need to understand, or I need to know what the market is doing. Once I know what the market is doing, I got my strategy. I will use my strategy. I will stick to my rules, or put it in practice, and place a bet in the market. Right? And because your positions are always bets. Right? All positions are speculative. We never know what is going to happen. Depending on what you think, you can be short, and I can be long. We are both using different strategies. We don't know what time frame. I don't know what time frame you have. We don't know what time frame each other has. So asking, and this is, Yaya usually ask me if I am long, or I am short, or I was long, or I was short. It is really, it doesn't have relevance. It's not relevant with what we do, because you can be long. Why can be long? It seems like you're looking for validation there, or you're not sure what you're doing. And when you start trading, you are always looking for that, and actually, it never ends, right? I may see, I may look for validation when I watch Jim Dalton's uh, updates, right? When I join his webinars or I was on his intensives. You need to have an opinion on the market, right? What other people does is just irrelevant. It doesn't matter because we all are watching the same market. You could have been long yesterday, or you can have been short yesterday, right? But whatever you are doing, you have your view, you have your opinion, and you have your own rules, because trading is about, also this is very very questionable. It's very counterintuitive, right? Because I have just said whether we have to adapt to the market. The market is not going to, it's not going to adapt to me, right? That's what I say. But also, at the same time, you are the market. You are the only one that matters. Nobody else. Whatever strategy you have, that's the one that you have to stick to. I was long and short yesterday. I was long or short. No, I was long in this break, and I was short in this rally. All right. Where? I guess I was long down here, and another long, I believe, down here. Right? I got some shorts maybe in this area, but when I noticed, that first this distribution was close, I decided to step away. I left the market, and it was a good day yesterday, so it doesn't matter what you do. Now we have ADP, okay? Remember ADP. That's why you have this movement here. This level here is not good. M came very close yesterday to this low, and now we have this market low right there as well. So this level now is getting weaker. Okay? It's getting weaker here. It doesn't mean I am going to short the market. Okay? Because my strategy today is a day that carries high rates. I expect lots of chop. The odds of chop and rotation are high. Okay. Oh, I was saying, and why I was long here. I remember very well. Okay, I remember very well what happened the day previous here. We got inventory that was super long from this closing, and also from the overnight. The market has no interest in following the direction of the overnight trade. Zero interest here. You could have shorted here. Some will close, and this is your stop. Of course, for me, it's really easy to do it, to say it right now. But you have to do it, like for example, right now. What do you do here? So what do you do here now? Tomorrow, at this same time tomorrow, I may be talking about what happened here. You go short here, because I will have the charts in front of me. That's why it's easy when you have charts here. But do go ahead and do your thing. You need to have your strategy, and both can work. Both the short and long can work as long as you stick to your rules. If you see it's working, just keep using it. If it doesn't work, you need to do something. You need to adjust. You need to do some adjustments. If you are having too little profits, looks like you're missing the biggest ones. Okay, do something, right? I clearly need to do something, right? Because now, in hindsight, I was on the wrong side. So I was trading with value, and what I was buying was the dips. I wasn't buying just, for example, right now. I'm going to buy here, or I'm going to sell here, just because. No, I'm not doing that. I wasn't doing that. Something. My loans, for example, my loans here were. Do you remember just what happened here? You have 10 a.m. ADP. What was the number? What is this number? Jolts, right? And factory orders. ADP is on Thursday. My bad. Jolts is at 10 p.m. Just let's hear that. There's something wrong here. I cannot hear it. Let's try another output. Nope.
See, transportation orders didn't negatively affect that number. Last month, lose a tenth from up 0.5% to only up 0.4%. Durable goods orders. Now, these are April finals replacing mid-month reads. So the mid-month read of 0.7%, now moves to 0.6%. Strip out transportation, lose a little bit. It remains at 0.4 exactly as expected, exactly as the mid-month read. Now let's look at capital good orders, non-defense X air, that's a capital spending proxy, up 0.2. It lost a tenth from its mid-month of 0.3%. And finally, switching gears from orders to shipments, they remain up 0.4%. The JOLTS numbers and the weaker than expected revisions certainly propelling yields a bit lower. And do keep in mind, we are now hovering very close to that 430 level in tens, which really held and caused us to bounce close to 470, a very important technical area to pay close attention to. ECB Thursday, will they cut? There's many more voices that think they won't, even though German unemployment jumped in their latest reading. David Faber, back to you.
Hey, Rick, obviously you mentioned the yield reaction here. We were already starting to price in a greater likelihood of a September rate cut by the Fed before these numbers. I would assume this might solidify that view.
Yes, it definitely should solidify that view. However, it's going to be very fascinating to see what the ECB does Thursday. Many believe these are coordinated moves, so maybe it'll tip their hand a bit for how we will start to behave if the ECB moves to lower rates first.
Rick, thank you. Rick Santelli. Well, let's get back over to Sarah as well. This is typically the time in the show when Sarah has all sorts of exciting charts about the macro economy, although I know today you have excerpts from your interview with the IMF director, right, Sarah? Yes.
Right, yeah, and I would say that the JOLTS report, the job openings number, is indicative of what we were talking about, increasing normalization. Job openings were sky high in the last few years coming out of the COVID pandemic, and it was one reason why the Fed was looking at a tight labor market and seeing inflation as still a problem. As that number comes down, and we're not fully back to pre-pandemic levels on job openings, but moderating here, the soft landing story comes intact, and that is exactly the phrase that the head of the IMF, Kristalina Georgieva, used when she described her outlook for the global economy. Here's what she said she's seeing.
First thing we see is a world economy that has proven to be more resilient than we feared some time ago. In fact, the last 2 years, global GDP is almost a percentage point higher than we thought it would would be in 2022. So we gained 6.7% real GDP in these last 2 years.
And why are we in better shape than the IMF and everybody expect?
All right. So there's a lot of talking about. There's a lot of eyes on these jobs now. Now, the eyes are not. It's like switching, right? Going from the bonds now to market. When it went from the treasury notes now to jobs reports, right? It's increasing. So the openings have shrink. Now we have this reaction. Oh, I was talking about my longs here yesterday. When the market has this, was selling here. I guess I have some shorts here as well. Don't remember. I think I decided to favor one side over the other, based on what I saw here. And when I saw all the selling coming from this exactly held back, that's when I guess that was the reason. I don't remember quite well. But when I saw the market, breaking, and then have spike, those spikes are usually the last straw, the last action that these kind of traders have, and that's a good opportunity for me, for what I was using, right? So I got kind of get really close to this low here or this low here, right? But I didn't expect much as well, right? I didn't expect much because you got an idea of what happened the previous day as well. Inventory is just super long. All right, super long, and some rebalancing is in the odds. I guess I made like 4 or 5 trades yesterday. But I got to watch the market first. Got to watch the market here. And I had another trade. I guess my I don't remember. Gosh, man. I guess my loans were in Nasdaq. And my shorts in the ES. I don't know. I was I got lucky yesterday. That's what traders say, right? When you got good day, you got lucky. When you got bad day, well, it was all your fault. That's not to get too overconfident. Hello, Canada. Hello, France. Please let me know if you have any questions. I don't have too much expectations for today. I mean, we never know when something's going to happen. We never know when something's going to happen. And when I decided to talk about what I did yesterday because Yaya asked me something. Because the question Yaya post on Discord. What matters is your strategy, your vision of the market. We all are different. And most of what I do has to do with rebalancing of inventories. Short-term trading, and actually, I am just repeating what Jim says, right? All the time. Most of what we do have to do with rebalancing of inventory. Inventory is getting too long, too fast, or too short, too fast, too far, too fast, right? And the rebalancing that happens after that. Sometimes, and everything has to be put in context. It is one thing. Let me bring something here too. Something else. For example, if I am going to talk about this market, this specific market, like right now, right? It is one thing. It's one thing, doing what I did yesterday. Come on, my bad. This is not. We're May, right? We are just starting the month here. This contract, I believe, expires. This is the rollover week here. Okay. And this week here is September contract. Now, it is one thing doing this type of trades here. Here during this month. And another way different. They also that kind of trade can have some success are diminished here, for example, right? During these months here. During this part, for example, here, we may have something here, right? Because this is when it just started during these weeks. This is that's another thing as well. Right? And I still, since the beginning of the year, I was thinking too, this election year is I think I haven't been through, I actually, this is my second time, right, going through these election cycles. This is the second time I got these elections years. Those are another cycles as well. We talk about the cycles, the intraday cycles, the weekly, the monthly, the quarter, the contracts, the contract cycles, the year, and also even bigger when we have these election years. I believe the markets have had some hopes also. Trump and Donald Trump coming back to the president to the White House as well. That's also some. The markets are always forward looking always. The rate cuts right now. For example, we are talking, some cut in December, right? I don't know which, and they are talking now also about 2 rate cuts. No one. Paying attention to what this guy says, all these talking heads, what this talking head says, or trading out of what they say is very dangerous as well. Just don't. But that's why most of the trading floors have this news, right? Have Bloomberg or whatever, CNBC, but they have it muted, right? The only thing that they are looking is, you don't want to hear these guys, right? But it is, you also don't want to trade in a bubble. You want to know what the street is talking, what is the talk on the street. All right, now this is super weak. It's getting weaker and weaker as we talk. Longs are getting confident now. Oh, this is support, right? Now, most of these I am super neutral here. I got no intentions to do anything here. I really don't. I really don't want to do anything here. What the heck? I really don't want to do anything here. I think the market is positioning for this number, maybe positioning for this number here. Oh, by the way, when markets, yesterday, we were talking about this range, right? Today we were talking about this range, this to the range here. And also the fact that the market opened with the gap, close the gap, get back inside previous range. Also targets. It is the same guidance that we use here for this range here, for this range here, are applicable for today's as well. I mean yesterday's as well. Getting back inside this range targets the opposite side of such range. Alright. It is 10:20 a.m. I don't have much to say as a I don't have any plans. There's something very interesting that's going on in the bond market. Let me show you before I close the day. Maybe close the stream. Look at the reaction. Look at this. This is your. Look at this, man. Look at this. Look at this short cover rally is happening here. You can see this as a strong market, right? Really nice. This market now is going to make a new all-time high. Right? It's going to come back all the way to this year. I know that's going to happen, right? But when we got also closer look, remember what happened here, what happened here as well. Just be careful. We got a nice excess high now. Really nice excess high here. Market reached this high and higher prices are being rejected. Something that also worries me is gold making these highs, right? Being the markets, doing all-time highs, clearly trading at the highs, right? Way up here, right? And you have gold also at that high. That's always you always question. Oh, okay, something else. Notice this thing. This is what I forgot. I was trying to remember. Just take a look at this. Well, this is something maybe going on here. Whenever I saw or I noticed something like this, you got something here now. Do you? It can be this one, maybe this one here. And this could be very well at a high, right? Not selling. Let's see if this market takes this high, for example. I forgot to take a note of this. We have this high at 5,300 here. This is no good, man. This is no good. It's not that clear in the year in Nasdaq. This is the Dow is just getting through. It seems like this is just are extremely focused in this side. Now what happens? Right, the market tries. When the market takes too much time to take out the reference, the market is in fact rejecting that reference. What happened here, right? Many times the market tried and failed, and then what happened after that? We have extremely short inventory, and woof, we have a virulent short COVID rally. Now the same thing happened the opposite side. When you got longs here, long inventories being built here and fail to take this level or this, or maybe just take these ones by a little margin, right? Just like it did here. You know, the reaction of that can be also be virulent, but in the opposite direction. I am not trying to predict what's going to happen. I'm just trying to acknowledge the scenario, the potential scenarios here. Because when you have multiple scenarios, when you build, you know, start building, you start to work with your imagination. When you have more than one scenario in mind, it's harder to get biased, right? Because if something happens, it's maybe something you're expecting doesn't happen, you have the other things in your mind, so you can see, okay, so now the market is doing this. It doesn't matter what the market is going to do. What matters, the only thing that matters is what the market is doing. That's the only thing. And I, as a trader, always try to get in sync with what the market is doing. You know, that's the first step in trading, trying understanding the market. The next one is understanding myself, understanding ourselves, right? And the third is the strategy. When you combine all of them, you start the process, right? While we are doing those two steps, two stages, we are going from novice to beginner, start gaining confidence when your trades start to work, when your strategy, you start to fine-tune your strategy, and you start to having results. You know, you start to gain confidence, and all this is a process, and there is no shortcuts for this. There's no shortcuts. If you have the business, if you ever made a business or had a business before, you will understand. You know, because business, managing a business, it's not. It looks easy from the outside, but it is extremely hard. You know, there's a lot of factors you have to consider, and there's all of them have a learning curve. Sometimes, you know, some people get lucky, and it's easy for them. You know, you have the perfect storm, and boom, you don't have to go through many things, right? But most of us just got to go through all the stages, all the parts, all the steps of the learning curve of any business, as this is a business as well. You know? In your career as well, whatever thing you are doing, you know, the longer, the more time you have been, probably, the easier it looks now to make money, for example, to have an income. But it wasn't easy when you started, when you just get out, when you just graduated to college. Your first job wasn't that good. There are some people that have some luck, right? As you know, getting out of the classroom to really good paid jobs, but most are not just like that. You start from the bottom. Same thing goes here. All right. Stop with all this nonsense. I wish you guys have a wonderful day, rest of the day. If you have any questions, please just let me know. Send me an email, or post it on Twitter or Discord, or just leave it in the comments in YouTube. All right. Have a wonderful rest of the day. Stay safe. Bye-bye.